Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment markets so you can see what we see in the global landscape. Generally speaking, third quarter earnings that are now coming out and will continue to come out for the next 2 to 3 weeks are actually pretty decent. Some misses, some improvements, but overall, if you kind of strip out oil because of lower oil prices, the overall S&P and most earnings are actually doing pretty decent. Long term, I would not be shocked to see oil start to come back. Oil stocks then would help contribute to some of the earnings power of the S&P and the United States overall. The economy in the U.S. is doing good. We're in an uptrend. We see no recession indicators from the data that we look at and all the research that we look at on a daily basis. If we saw the potential of recession and or a real slowdown, we would of course raise cash, add treasuries, things of that nature to really be very defensive. And that garden variety correction that we saw over the last 6 to 7 weeks, it's pretty much done. Remember, I always look at volatility as an opportunity. But unfortunately, a small percentage, in my opinion, maybe 3 to 5% of investors become heightened or too emotional when they see their portfolio dip temporarily. Remember, volatility is a natural part of investing. There is no way to get around it unless you put all your money in the bank in a CD that makes 1%, which of course you know what that's going to get you long term, basically zero or negative after inflation. So I expect volatility to continue. We've seen volatility since I've been managing money for about 30 years. Nothing new, nothing different. One of the problems that we all face, as I've talked repeatedly, is the news media hypes everything. One of the scenarios that I discussed months ago was China. China's economy not growing GDP over 7, growing a tad under 7, 6.9%. And of course, that was partially the reason for the sell-off you saw 6 to 8 weeks ago was China. The media portrayed it as China's going out of business. Far from it, folks. In fact, I would anticipate China to grow above average percentages for the next decade, 2 or 3 decades, simply because they're starting at a different reference point than the U.S. currently is. U.S. economy is doing well. World economy, generally speaking, is doing decent. Some parts are not as good as others, and some parts are better. We are fully invested. We don't have an issue with raising cash if we need to. But remember, we never know if we're going to get a 2% correction that's going to turn into an 8% correction. But statistically, we have a dozen 2 to 3% corrections every year in all the markets, not just the equity market, but often the bond market. We see 3 to 5 corrections often a dozen times a year. In addition, we see usually an 8 to 10% correction every year. And that doesn't mean that by the end of the year we may not continue to have this rally that we're seeing and things might not be substantially up higher. I firmly believe that's the opportunity we see right now. The correction that we saw that dropped around 10% is about 70 to 80% already back up on the other side, meaning most of those losses are already wiped out, and we're going to probably be hopefully approaching higher ground in the upcoming weeks, certainly, I hope, by the end of the year. If you're a client of our firm and you have any questions, please call me to discuss. If you're not a client, call our firm, schedule an appointment. It is time you become a client of Resney Wealth Management. There is a difference. Make sure you have yourself a safe and profitable day.